Good afternoon, Blue Line traders. I'm Sean with Blue Line Trading, and this is your January 23rd of 2023 weekly watch list video. We're also going to be putting this video up on YouTube today. So if you're watching this on YouTube and you're not a member of ours yet, you can gain access to our free chat room by clicking the link in the bio and joining our Slack channel. Now with that out of the way, let's jump into the watch list. Starting with the weekly trade report where we look at our performance from last week. When we look at last week, the market continued to move somewhat aggressively, and from a trading standpoint, things did slow down a bit, but we came into the week positioned to the downside, and we caught the downside move the first portion of the week. And overall, we are happy with our performance as the market followed our forecast pretty accurately, and the trade that we did put on was carried out with good execution. Coming into this week, this is where we believe the S&P currently stands. Now the S&P closed trading on Friday in the 39.88 zone, which is very close to the target that we called out last week. Now with that said, we do still see considerable strength on the higher time frames, which could mean that the market might take a more direct approach towards the 4,300 to 4,400 zone. And a good indicator of that would be a pretty decisive break and close above the 4,000 zone. Now a rejection of that zone and a failure to break above 4,000 would indicate that the original forecast is more than likely playing out and that we should expect a push down towards 38.50 before we see the rally up. Now other things to keep an eye on this week are going to be the Dixie, as there is clear daily positive divergence on the MACD, and there's bullish divergence on the RSI, which means that a bullish reversal is likely on the horizon. Now, a bullish reversal on the Dixie would likely result in bearish pressure in the stock market. There are also some significant tech earnings coming out this week. And with the NAS being the weakest area of the market on a larger degree, and at the same time showing marginally more strength on a smaller degree last week, we could easily see rotation from the Dow towards the NAS. And in that case, it would be a good idea to watch industrial stocks, because if we do see that rotation, industrial stocks are going to be a prime shorting target when the market does pivot for a potential run to new lows. Next, we're going to touch on our two theories real quick. Now keep in mind, it does not include today's price action. We're going to get into the daily update in a couple minutes, and that's when we will add in today's price action. Also, we're only touching on them. If you want a more in-depth analysis, go back into our videos. We've been following these theories for quite a while now. Now, theory number one is the WXY theory that suggests that the S&P will continue to rally towards the 4,300 to 4,400 zone before dropping to new lows in the market. Theory number two is the larger degree ABC theory that suggests that we are already in wave C coming down to new lows. When we put the Dow and the NAS next to each other, you can really see on a larger scale, and these are the weekly charts, how weak the NAS is compared to the Dow. And then when you look at just last week, you can also see how weak the Dow was in comparison to the NAS on a smaller scale, which means that, like I said in the previous slides, we could be seeing rotation into tech for tech earnings, which would mean that if the market does pivot in the near future for a move down to new lows, we should be looking at industrial stocks as our biggest targets for shorting. On the economic calendar, we do have a lot of data coming out this week that's going to give us some clues on how strong or weak the economy is. And that's going to be important with the Fed rate decision coming up in the near future. Now, this week is a Fed blackout week, which means that we're not going to get any information directly from the Fed, which could lower market volatility a little bit, but we should still be diligent of the economic calendar. We're going to switch gears now and move into the daily market update. When we're done with the daily market update, we will circle back and go over the watch list tickers. Now we're on the S&P futures chart on a 15-minute time frame. I've got your close from Friday marked right here. When we follow the red median line, you'll notice that the overnight session hugged the median line for the majority of the session and was very well balanced up until this point. Now at this point right here, buyers got very strategic. You'll see that they put in the overnight low right here, which is most likely a spring test to test liquidity to the downside to make sure that there was no interest in lower prices. And then from that point, they got pretty aggressive into the open. They brought it up with conviction, as they broke the high of Friday at the 39.90 level. They held it all the way into the open, and we opened on this print right here. Now on the opening print, we did come down and back test the median line, but then from that point, they went on a bullish run and put in the high of day at the 40.56 level at around 10:45 a.m. Off of this high, we did see a pullback to the midpoint of the session, but we closed in the upper half, which is pretty bullish. The big question of the day is going to be, with the bullish rally we saw on Friday and the bullish pressure and strength we saw in the area of our target, and then the break of the 4,000 zone today with a close above it, should we still be looking back for a pullback towards 38.50, or should we be looking up from here? And to answer that question, we're going to look at all the evidence that's available to us. Starting with the price action, and we're going to start with the overnight price action in the green box. You'll see that we had the rally on Friday, and the overnight pretty much built a base which formed a 15-minute or even hourly bull flag that did not even take out the previous low, which means that this was a base that buyers could build upon. So that is why that is bullish. Now coming into the daily session price action, it is also bullish. And the reason it is bullish is the opening prints are the lows and the closing prints are the highs, which means that this is an intraday uptrend, which was sustained for the majority of the session, and it was follow through from the overnight and Friday sessions. When we come down to the intraday volume, it is dense with buying bars, which tells us that buyers had pretty good intraday control today. Now we do have one red flag I want to point out, but it's on a lower time frame, and that is we do have negative bearish divergence building up on the 15-minute, which means that we could either need a pullback or this could even potentially be the top, and we'll get into that more as the video goes on. Pulling up the session-based volume profile, you'll notice that we have a higher point of control and value area, and the profile shape is pretty messy. It might be an uppercase B, but we're just going to leave it as it being messy. But what I'm looking at here is the point of control being near the top of the zone, with most of this being buying here, which tells us that this high is in jeopardy of being breached and buyers might get follow through here. Moving over to the daily time frame to look at our daily candlestick location and structure, the location is cautiously bullish. And the reason I say cautiously is we do have this wick up here and we're in this kind of supply zone right here. And that's where we closed today. Closing in a supply zone without a definite answer if you're going to go up above it is always something to be cautious of. Now the actual structure of the candle though is bullish. And the reason that is bullish is we basically had somewhat of a kicker type candle where we opened basically on top of the previous real body and then pushed up from there. When we come down to the volume, it is indecisive. And the reason I'm saying this is indecisive is, yes, we do have a slight increase on ES, but look at the volume coming down right here compared to going up right here. We still have lower volume, which tells us that this is a corrective structure. And when we really think about it, it really doesn't give us much in the way of clues as to what we're going to be looking at next. Now, another thing I want to point out here is, again, on the RSI, again, on the daily time frame, we do have a new high right here, and we have ever so slight either resistance or we can call it bearish divergence on the RSI. So that could be signaling that this is running out of steam. Coming over to the market internals, we're going to start with the VOLT. Buyers did break the benchmark today. They did have a nice strong day, but it wasn't as strong as Friday. And you can tell that we have an ongoing theme here where the price action is moving across the chart and we're seeing the volume dictate the strength and the shifts in control. So the question we should ask ourselves is, because we saw less strength than Friday, is this a shift starting to take place? When we come down to the ADD, we did open very balanced, and you can see that as we open right near the zero line, and then we pushed up from there, and the market breadth was healthy for the majority of the session. Now, I do see a little bit of weakness into the close, and the reason I'm saying that is when we come over to the SPY, you'll notice that coming into the close, we at least back tested this area in the price action. The ADD did not, which means that this push up was a lot weaker than the price action. When we come up to the tick does favor the buyers as there's a lot more density up top, and they did build good cumulative strength. But again, remember this ongoing theme with the shifts in control, and is that what we're seeing here? And to determine that, we're going to have to see what happens tomorrow. Now, when we look at the S&P sectors, you'll see that everything is green, and risk on is leading as risk off was pretty much flat. Before we combine our evidence, I want to recap what we had sent out on Friday. What we sent out in both the chat room and even on our Instagram was we're approaching the target that we called out. That was in the 39.80 zone. And it looked like we were going to close in that area. And originally we said that's a potential top fishing zone based on our theories. And at the same time, though, we were seeing a lot of strength as we were nearing that target, which brought into question, it looks like we might surpass it. And today we did. We closed on Friday at the target, and today we surpassed it and we closed above it, which would indicate a more direct approach towards the 4,300 zone. So with that said, unless we get a very bearish breakdown starting tomorrow, this theory that we are already in the C wave coming down is somewhat unlikely at this point. And I'm really leaning towards this being our theory, the WXY theory. And it is a potential that this is an ABC going up and it's not a WXY, but either way, it's a three-wave movement coming up. Now, when we combine all our evidence together, we can definitely say that there's a lot of strength from buyers. And we can also say that it's pretty evident at this point that we're in a rally going up. Now, remember, rallies don't move in straight lines. And I want to move in and zoom in on this price action starting in this area right here. And the reason why I want to pull this up and show it to you is the fact that we didn't break down and come to a new low, and it's unlikely at this point based on where we closed, tells me that we could see this as being a possibility where we have this 1, 2, 3, 4, and 5 right here, which would mean that this is a 1, 2, 3 wave 2 pullback, which means that this is the beginning of a bullish structure upwards, and this is wave 1 of 2, which means that we should be looking for a pullback right around, when I measured it, I think it was right around 39.30, and then we would go up for 3 of 2 and then keep going in the rally. So with that said, I am still in our bearish positions that I held from last week, and that is because once I started looking at this structure and the fact that, again, I know the market's fractal and it doesn't move in straight lines, if that is what's playing out and we should be looking up from here, and we're not going to get the breakdown to 38.50 prior, we're still going to get a wave 2 pullback. That is where I'll take off my bearish positions and flip bullish. And you have a perfect entry signal here because this pullback is going to act as a back test of this shelf of support right here. So I'll mark it so you can see it better, but that's going to be my plan going into the rest of the week. We have this shelf right here. And when we near it, that's going to be my entry signal because it was resistance right here and then it becomes support. So I'm going to enter bullish there. I'm going to write it up to the 4,300 to 4,400 zone. Now I'm going to clean some of this up to give you one more scenario here. So we have this extension right here, and this is off of this down in here, and this is a 100% extension. Now we didn't hit it right here and we tapped it right here, which means that there is still a potential, a very small potential, that we could still come down to 38.50. Now a good indication of that is either way, we're probably going to come down from here. And when we do, when we come down to the 39.50 to 39.30 area, if we do not hold that area, or we start to see a lot of selling strength as we near that target, then that would be a good indication that we could be going lower. If it looks like we're coming down to tap it and we're going to get a reversal, then again, my plan is to take off my bearish position at that point and then flip bullish for the rally up. So to answer the big question of the day, at this point, I think that there is a high likelihood that we're going to take a more direct approach to the 4,300 to 4,400 zone, and that we're probably not going to look back unless we break below. I'm going to use the level, this last low right here, actually. That's going to be my indication level. We break 3,900, we're coming down to 3,850 and then going up. So that's what I'm going to be looking for going into the rest of the week. Moving into the watch list tickers, we're going to start with NVIDIA. Now, NVIDIA is getting really exciting, and we sent this out last night, and I believe it is playing out today, and we're going to get into the actual chart in a few minutes. But if you notice, we do have a newer format that we're trying out, and I'm going to go over it right now. So we have the chart, which is showing a moderate conviction inverse head and shoulders, which had resistance at 190. We broke it today. The RSI looks pretty healthy. The volume is suggesting a possible ABC correction off of the October low. Now, as far as targets go, when we look at the volume profile gap that is on the chart, it's between 190 and 218. Now, 218 lines up perfectly with the 100% extension, which would again suggest that it is an ABC corrective structure off our bottom. Now, the trade idea is a break above 190 would suggest a breakout from the pattern, which is the inverse head and shoulders. And most typical inverse head and shoulders have a back test of the neckline. The neckline is in the 190 area, which creates an entry opportunity. Now, the only red flag that we would have here is a rejection of 190, which we don't have today, or a failed breakout. And a failed breakout would probably rear its ugly head in the next couple of days, but we'll get into that more when we jump into the chart. All right, moving over to NVIDIA's daily chart, and we're live right here. Look at today's candle. This is pretty bullish. Off of this low right here, we have increasing volume, and it's healthy volume. Look, we haven't had anything this high in a while. We broke 190, and we're trading currently at around 192. Now, there are a few things I want to point out here. The RSI on the daily looks healthy, which tells us that look up. We're also getting this signal on the ADX right here, which shows that we're getting some strength and momentum. The ADX lines are pointed up, and we broke that 20 point on the ADX line. The MACD is also signaling a buy signal because it's crossing over the histogram. Both moving averages are pointed straight up. So the one thing that I want to show here, though, is we still do have negative divergence on the MACD, but it looks like we might negate it. Now, when we come down to the lower time frames, they still look healthy on the 4 hour. Still have a good signal here, good signal that we're crossing here. So everything looks good on the 4 hour. We are in oversold though. Come down to the hourly, we're in oversold. We do have bearish divergence on the RSI, and we're about to get a sell signal on the hourly MACD. The ADX is also curving over. So what this tells me is that we're potentially going to get a pullback here, and it could potentially be the entry point. So I want to go back to, actually, let me look at the hourly here. Now this is going to be too condensed. Let's go to the 4 hour and try. And you'll see that the neckline has really good POC confluence, and we broke that POC. And then where could it be going? Well, if we look at that same profile, we have the structure right here. Before a pullback, if we push up further before pulling back, look at 195. 195 would be a good indication. If we break 195 and don't look back, you might have to trade this into momentum, because look at this gap right here up to our target. It's going to suck it in like a vacuum. You'll also see that we have this structure of market activity here, and there's POC confluence for that structure right here, and then you have all this resistance right here. So I do think 218 is going to be the target. My plan with this going into tomorrow, because I want to trade this, this looks like a spicy setup and I want in, is I'm going to evaluate tomorrow morning. if we break 195, I'm probably going to take it into momentum and just get in. And if we don't break 195, I'm looking for the pullback, and the pullback could be as low as 187.75 because that is the actual level where this point of control is, regardless of where the neckline is. Because remember, just because the neckline is 190 doesn't mean we can't violate it a little bit. And I think 187, or actually 187.99, which is right at 188, is that magic number. So that's what I'm going to be looking tomorrow. But there's a good chance I'm going to be buying this long tomorrow for a nice move up to 219 to 220. Next on the list is Tesla. And when we look at Tesla, everything's going really well. It rallied today, took out its last high. And we said, as long as we make a new high here, it's going to continue going up. And the fact that it's continuing to go up, I do think that the 166 target is still a very logical area for this to land. Now, keep in mind, we do have earnings coming up on Wednesday. And I personally am not going to trade this through earnings. I'm not comfortable doing that. I don't swing earnings. I'll hold long term, or if I am, in a gambling mood and I have deep profits in the ticker going into the earnings event, then yeah, I might gamble a little bit with the earnings release, but I'm not going to do that in this case. So I'm going to be looking to play the reaction. Now I see two things happening here. I see that we're running into earnings, which means that we could see a pullback, and that would be a good bullish entry point potentially. Or we get a very bullish reaction to earnings. We get up into that 166 zone, and it gives us the signals that it's a shorting opportunity. And then I would short off that zone. So basically, we have to watch it and see what ends up happening here. Next, we're going to take a look at Netflix. And just to recap Netflix, we had this 5-wave structure potentially off the bottom, and we're looking at around 150 to be the top. And today we hit it. And it looks like a breakout. Everybody's saying it's a breakout, but look at the volume. We popped up, and then you want to see increasing volume. You want to see something like this, not something like this, especially when there's no harmony in this candle compared to yesterday when we compare it to the volume. We also have a gap right here. We're extended. We're at the top of the Bollinger Band. And let's come down to the MACD. Now we're on the daily, and we come down. We still ever so slightly probably do have some resistance on the MACD right here. And when we come down to the ADX, we're not really seeing signs of a strong potential breakout here like we saw over here. And the RSI, yes, we have a new high, but we have a high into overbought territory. And look at every time that's happened on the daily time frame recently. It's all been rejections. And then look at the distance from this high to this high, and then come down and compare it here. This is not a very powerful high. So that brings into question, is this actually a breakout? And I'm going to say possibly not. And what will be a good indication of that? Well, we're going to look at the lower time frame evidence, but on a pullback, which it looks like we might be getting here, especially because we have this upper wick, are we going to hold this level right here? If we don't hold this level, that's a pretty good indication that we're getting a pullback off of this 5-wave structure. Now let's go to the 4-hour and see what we see there. And the RSI and MACD, RSI is pointed down. That's never a good sign as far as your time frames go. 4-hour is a more substantial time frame. And we do have this crossing above here, but this is not pointed up. And we still have that negative divergence on the MACD somewhat. So it's getting weaker as we go down, which makes sense. Let's go to the hourly. Now we have bearish divergence. So we know we need at least an hourly pullback. The MACD is showing a sell signal. The volume is coming down as this is climbing up. So I do think a pullback is needed here. The way that pullback looks is going to be a really big indication if I'm going to go bearish on this or not. Again, we have this point of control right here, 325 in this area. That actual level I pointed out a minute ago was 335. So let's see what happens when this pulls back. If this was truly bullish, I would see this level holding around 350 and then it want to go. So keep an eye on this. This might be a good trade if you don't want to trade NVIDIA and you still want to be in the market this week. Last, let's take a look at Microsoft. Okay, so when we look at this, Microsoft has its earnings this week, and they are scheduled for Tuesday, tomorrow. So what do I see happening here? Well, you're getting a buy signal right here, but I don't like this candle right here. We have a potential breakout over 241, which is an important level, and this could potentially be a back test. So where could it go if things remain bullish? I would look at this as a three-wave movement as of right now. At a minimum, 100% extension is at 253. So if they rock their earnings, I could see it coming up to here. And if we exceed it, then we know that this could potentially be a larger scale move to the upside and be a five-wave move, because we'd be looking at the 161 extension. But if it rejects this area, and this is what we're looking at, and then we're going to come down, which I think is also a high probability because the overall direction is still down, then this would be a shorting opportunity right here. So obviously at this point in time, we don't really have too much in the way of evidence here because of earnings coming up. We don't know what the reaction is going to be, and it can negate all this stuff. So what I would be looking for is, especially the fact that it's tomorrow and we're pulling back somewhat today and we had a flat day, is I see it potentially being a push up opportunity tomorrow. And I would look at this level for a reversal potentially. And if we start to see a lot of weakness in this area, that would be a good short signal. So that's what I'm seeing on Microsoft. That's pretty much all I've got prepared for you guys today as far as tickers go. If you guys have any tickers you want to request, if you're on YouTube, you can put them in the comments. If you are in the chat room, you can just message me and I will take a look. We're always here for our members. If you request a ticker, we're going to go over it. All right, I will see you guys tomorrow.